Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this week's video, we'll discuss how investors can navigate a shifting market as performance broadens beyond large cap technology companies. The market rally this year has been driven by growth stocks, including large technology companies related to artificial intelligence. However, we've recently seen other parts of the market perform well, including small cap and value companies. Adding to this rally, recent inflation data suggests that the Fed could begin reducing rates soon, providing a big boost to many parts of the market. While investing trends come and go, how can investors understand the current market and economic environment while taking advantage of long-term market growth? First, this chart shows the performance of different styles and factors across the market, with returns re-indexed to zero a year ago. It illustrates that though broad stock market indices have performed well, there is variation in the performance of different sizes and styles. Large cap tech stocks have garnered a lot of attention for their strong performance, thanks in part to the demand for AI and the Magnificent Seven stocks, which have gained over 190% over the last 18 months. However, you can see from this chart that other areas of the market are also beginning to participate in the rally. Improving inflation and the increased likelihood of approaching rate cuts have spurred both small cap and value stocks in particular. Small caps, for instance, tend to benefit when rates decline because they have more limited financing options than larger companies. They also tend to be more US focused, so positive economic news can disproportionately impact their stock market performance. Next, this chart shows that growth stocks are outperforming value stocks right now, but that has not always been the case. Growth and value have traded leadership over the course of many years. This chart tracks the returns of the Russell 3000 growth, value, and standard indices, all indexed to zero in 1995. The blue shaded areas represent the spread between the growth and value returns. As you can see, growth stocks outperformed in the late 1990s and early 2000s, but when the dot-com bubble burst, value stocks took over for much of the 2000s. The strong demand for technology stocks over the past few years has ushered in a new wave of strong performance for growth, with the exception, of course, of the 2022 bear market. The performance differences between growth and value have been the source of much academic research over the past several decades. The key for investors is to know that both are important for a diversified portfolio, since it's difficult to predict what may drive the next stage of the rally. Finally, the bars on this chart show the next year earnings growth estimates broken down by size and style. The black diamonds show estimates for PE ratios over the next 12 months. Despite a recent broadening in the bull market rally and volatility in the growth and value stocks, valuations still differ significantly, with value and growth trading leadership over the past year. Large cap growth equities have by far the highest estimated PE ratio over the next year, following strong growth performance year to date. Since expected returns are highly dependent upon valuation levels, it's important to diversify across other styles as well. Small cap value, as an example, has a much lower valuation ratio, even though investors expect earning growth rates comparable to large cap growth stocks. All of these charts highlight the importance of diversifying across different styles in a portfolio. While there's still market enthusiasm for large cap tech companies, investors who hold different parts of the market can benefit from all of these opportunities while ensuring that their portfolios are aligned with their long-term financial goals. I hope that you found these high-level insights helpful. Please don't hesitate to reach out if you'd like to discuss any of these in more detail. We look forward to speaking with you soon.